Recently, Toronto home sales actually fell by 41% compared to the same time last year. This market downturn has actually begun. I'm pretty sure that you've seen all those alarming headlines recently about the market crashing or the market downturn. Is the Toronto real estate market on the brink of collapse? This is what we're going to be discussing today. But first, show reel, hit it. So today we're going to actually discover what's really going on in the Toronto real estate market. And we're going to look at two reports to investigate this. The first is the Toronto Real Estate Board Spring Market Watch report. And the second is the Bank of Canada April Monetary Policy report. So first, according to the Toronto Real Estate Board report, the sales activity decreased by 41% in April 2022 compared to April of last year. 2021. What happened month over month between March and April of this year? The volume was down by 27% in just a 1 month period. But what about the price? The average price was still up by about 15% year over year. The average prices decreased by 3.5% from March to April. So sales volume is significantly down and prices are slightly down as well. This scenario seems to be a replay of actually the events that we saw when COVID first started way back in 2020. Whether it's the political landscape, policy changes, or the rising interest rates, or the war, or COVID, these scenarios all contribute to the uncertainty of the real estate market. It influences that. And so what actually happens when we have the interplay of so many uncertainties? Well, uncertainties contribute to fear. Yes, they create fear in people. What happens with fear? People actually freeze. Or, in other words, they adopt a wait-and-see pattern of living and riding things out and sitting on the periphery rather than jumping into the real estate market. This is why we're witnessing the current trends with sales volume on the steep decline lately. And if I had a crystal ball, I would guess that the market will actually remain very quiet for at least another couple more months, as another rate hike is actually forecasted for June. And even if we see some price drop in some of the areas of Toronto, we're not expecting huge movement on the price side of the real estate market, because the real estate market continues to remain fairly stable overall. As a general rule, I'm very confident about the longer term prospects of the market, as you should be as well. And it'll be really interesting to see what happens, especially once the interest rates stabilize somewhat. So what trends have we seen lately? Well, the biggest one is the trend in the 905 area. As the area with the biggest gain over the past 2 years, this was the result of people jumping ship out of Toronto and moving further away from the city center because they could work from home, right? Ironically, this area has experienced a bigger than average price drop. Why is this? Well, the opposite's true. Because people are now heading back to the downtown core or back to work, to their offices, they want to actually, once again, live close to their office. What we saw in April compared to March is actually that sales in the 905 area, or sales volume, was down over 26% across all home types. So detached homes were down 6.5% in this area to 1.530. Townhomes down 7.6% to about 997,000. Condos down 5% to about 723,000. Number two, there has been solid prices seen in the 416 area. So what we did see was a drop in sales volume of about 27% between March and April. The average price of a detached home in this area was trending upwards slightly. And so we saw detached go up about 1.4% to about 1.9 million. Townhomes were down 2.7% to around 1,090,000. And condos were down about 1.26% to about 821,000. So what does this all mean? It means that the market is shifting. It's actually not collapsing, everyone, but it's shifting. I fully expect to see the shift in the market back to the 416 area from the 905 area. I also expect to see a shift from low rise to high rise housing as we actually enter a new era in the real estate market. This is post-COVID. As I mentioned, the housing market we fully expect will not collapse, will remain robust for at least two reasons. Number one, high immigration levels. We're expecting that the immigration levels will continue to rise as we enter this new post-pandemic era. We're seeing immigration open up once again, and the high rate of immigration levels are expecting to continue to fuel the real estate market. So obviously these people that are coming to our great country will need a place to stay, whether it's renting or buying. Number two, the monetary policy report from the Bank of Canada indicates that there's an excess demand economy. And this is very interesting, and it's produced interesting trends. In fact, it's showing that our labor market conditions are very, very tight. Employment is very stable. Wage growth has risen to near pre-pandemic levels. And companies are actually experiencing a very difficult time attracting skilled labor and retaining a solid workforce. So unemployment is inevitably down. This strong labor market reflects our economy and our economic recovery. The report actually shows that the consumer spending, exports, and business investments are projected to actually grow solidly. In fact, our economy is showing great signs of recovery, and it's operating beyond productivity and productive capacity. This means we cannot actually produce enough to satisfy consumer demand. That's what this report is showing us. Hence, we're actually expecting that this solid and robust economy is going to spill over into the real estate market in the second quarter. Now, how can high interest rates help us in this regard? It will slow down the spending and actually reduce the excess demand in the market and in the economy. And it can also help curb the high inflation rate as well. That's the idea of the higher interest rates. Similarly, in this quiet but very stable market, there could be a good opportunity, or that's for you to decide. The bottom line is we have a very strong economy with robust employment where unemployment is very low and there's a high level of immigration. There's more immigrants coming to this country all the time, and this provides a very solid backdrop to the housing market. What will remain interesting is how the Bank of Canada strikes a balance between what we've seen in the past of combating this rise in inflation and slowing down the economic growth and related government revenue as we continue to walk out of this pandemic and continue to pay for pandemic-related programs. Now, if you found this information helpful, make sure you hit that subscribe button and also the notification button so I can continue to share some great videos like this with you. And if you are thinking of moving to Toronto or within Toronto, don't hesitate to reach out to us on your favorite social media platform. We've always got your back and we've always got you covered. Until next time, this is Pamela Haines from Homes by Pam, helping you with your real estate matters.